So it's official, FTX is bankrupt. This, with Terra's meltdown, are some of the biggest blows to the crypto industry as we know it, and it can have devastating effects. Fair warning, do not go to the FTX website at all. Uninstall any FTX apps that you have on any device. All software are suspect as a result of the hack that happened last week. We're gonna talk about the hack in more detail a bit later. Just uninstall anything that you have of FTX on any of your devices. So sit down, grab your popcorn, get comfortable, because this is a big one. Let's go. It all started back in 2017 when Sam Bankman-Fried, or SBF as most people know him, started a company called Alameda Research. They are a trading company and they specialized in trading in cryptocurrency. They started off by buying Bitcoin and other cryptocurrencies in the US and then selling them in Japan. They made billions through this technique called crypto arbitrage. As a result, they became an overnight success. They became a market maker. In fact, they became a supplier of cryptocurrency to most of the world's crypto exchanges. And you need lots of money to be in a position where you can supply crypto to other exchanges. So go figure. In 2019, SBF founded FTX, the crypto exchange that we know today. Became a very, very big player in the exchange environment. FTX started attracting the attention of many big players and they started investing billions of dollars into FTX. Obviously, Binance noticed this. They are the biggest exchange in the world and obviously they don't want to be dethroned. So they also invested some money into FTX, and this is where CZ and SBF started becoming friends. As time went on, SBF from FTX, lots of acronyms, started bailing out many other crypto exchanges and other companies that were going down. He spent about $1 billion in doing this, quickly becoming a very well-known figure in the environment, and people really liked SBF. And then when asked, why are you doing this? He would say that it's for the benefit of crypto, which is true. And also this.
It's not fair to customers.
SBF also liked playing by the rules. He was helping to create new laws to govern the crypto space. He was really invested in creating a better future for crypto and the entire crypto environment. CZ, Changpeng Zhao, didn't really agree with everything that SBF was up to. So their friendship didn't go all too well, to the point where Binance actually sold all of the shares that they owned in FTX. But they still had a lot of FTT token as they were still selling it on the platform. Then on November 2nd, 2022, CoinDesk published an article, not just any article. This article changed the direction of FTX and crypto forever. This article claimed that Alameda Research had $14.6 billion of assets at the end of June 2022, and most of that was held in the FTT token. Alameda Research immediately reacted with, "That's not the whole truth, that's not the story." And then everybody replied with, "Okay, whoa, okay. We're not trying to offend you, so tell us, what is the real story then?" And they replied with, "The final nail in the coffin of the relationship between FTX and Binance was when FTX released $400 million worth of FTT token onto the market without any warning and completely out of their schedule. FTX was basically now printing money." Does that sound familiar? On November 6, 2022, Binance's CEO tweeted that Binance will be dumping its entire holding of FTT onto the market, thus also stopping the selling of FTT on the Binance exchange. This caused an immediate bank run on the FTX system. Customers withdrew $4 billion within one day. This caused a backlog on the system because obviously they were not prepared for this. And the problem is the backlog created more FUD, which means more people started withdrawing, which means in the following 3 days, customers withdrew another $3 billion. On November the 8th and 9th, 2022, the price of the FTT token fell from $22.06 to just $4.76. FTX realized that it was real now, and they started grabbing at anything that they could use to just save the situation, and they even went as far as asking Binance for a buyout. Binance answered with, "This afternoon FTX asked for our help. There's a significant liquidity crunch. To protect users, we signed a non-binding LOI intending to fully acquire FTX.com. A few days later, Binance announced that they will not be buying FTX. FTX started funding weird bets with customer money, a bit like a gambling addict that lost everything and is now just trying to get money back from anywhere. It doesn't matter what they did, and they lost even more money. Then FTX came out and said, "We cannot cover all withdrawals." This was because all of FTX's assets were dropping in value and couldn't be liquidated. November 11th, 2022, SBF resigned as CEO of FTX, and FTX filed for bankruptcy. To make things worse, on November the 12th, 2022, the FTX exchange was hacked and $600 million was gone. So things are not looking good at this place and time. But I want to know from you guys, what do you think? Was SBF a victim of the article that was published on the 2nd of November? Do you think it would have changed if they didn't publish that article and nobody asked for their balance sheet? Because SBF always did try and play by the rules. He always did do what's good for the community. Do you think this would have been different? Let me know in the comments below, because this will definitely have a huge impact on the future of crypto.